Hello, it's Brian Shannon from Alpha Trends Blogspot. Today's Thursday, the 14th of June, 2007, and the market's closed. And I'm going to start out again with the ProShares Ultra Trust Short, or Ultra Short Trust, whatever this thing's called. Anyways, the inverse S&P 500, double inverse S&P 500. 2 days ago, we noticed the huge volume in here as the market looked like it was taking off again. But I was pointing out the direction of the 50-day moving average, and once again, I just want to I bring it up just to remind you the importance of trading in the direction of the primary trend. The primary trend is best identified by the 50-day moving average. That is the direction of the 50-day moving average. And a lot of people got hurt in this market, I think, as it looked like it was finding support along that 5-day moving average, and then it just completely collapsed. Now that, again, it's the double inverse of the S&P 500 fund. And in here, what I was looking for today, I was hoping we would get a little bit of a pullback, but instead we had a gap higher, and then the market held on to that strength all day long. So it did move convincingly above the 152 level. It doesn't look like that was just a little fluke move because it held up there, and 152 I think is going to be an important level of support here over the next couple days, maybe a week or so. But you know, the way this market looks is that it bottomed out with a higher low, and it broke past here and made a higher high. Now the buyers are firmly in control of the short-term trend, and they were always in control, never lost control of the longer-term trend here in the daily time frame. The one thing I do like to point out when we have it is that we've just seen a cross of the 10-day moving average down through the 20-day moving average. It's not a sell signal. It's not any kind of signal. You don't want to get your signals to buy or sell from moving averages, only from price and how they act in relation to those moving averages. Like, you don't want to buy at the 50-day moving average, but once it's shown as support. Back to the point here with the 10 and 20-day moving average, though, what I've typically found is that once we have that 10 and 20-day moving average crisscrossing, it means that the short-term trend on this daily time frame is down, the intermediate-term trend is neutral, and the longer-term trend is higher. So we have a mixed message here from the market, and typically these mixed messages come at turning points that perhaps if it breaks below the recent lows, then we might be putting in a topping process here, but it's way too early to call for that now, because we need to see that 50-day moving average at least flatten out before we can start calling for a top. A lot of people are going to look at this and say, well, it needs to make a higher high. It doesn't need to make a higher high to confirm that we're still in a bull market. It's how individual stocks act in this market that matters, if that's what you're trading. But right now, the S&P 500 appears to me to be more in a neutral phase than the bullish phase. The buyers, and I say that officially occurred yesterday. So my bias has gone from bullish because we had the 10 above the 20, above the 50, and they were all advancing with the 10 above the 20 and the 20 above the 50. Now officially I'm saying in the S&P 500, the trend is now neutral on the daily time frame. It doesn't mean stop trading by any means, because we've still got these intraday time frames where we've got some fantastic setups occurring, and there's going to be really good opportunities within the individual stocks, and that's what we need to focus on, and that's primarily the focus of what I do here. The Nasdaq 100, again, the important level of support, most important level of support, is going to continue to be down near this 46 level. We're moving away from there pretty rapidly, and it looks like, well, now we're back above the 10 and 20-day moving average, which we are in the spiders as well. I meant to point that out. But we've got this market, I think, heading back up towards these highs near 47.65, 47.80, and we haven't seen the crossover of moving averages in here. But because we've had these two kind of look a little bit like failed breakouts, just because of the way they came down and tested so hard, that I'm going to call this market neutral as well, even though we really don't have that evidence from the moving averages, and that's where I typically like to get that kind of confirmation from. What we were looking for in here, well, what we were looking at is, I pointed out, I'd been getting several emails from people looking at this as a head and shoulders pattern. And again, a pattern recognition is fine, but don't trade on it until the pattern's completed, which means breaking down through the support. As I pointed out yesterday, that pattern was broken with this downtrend here, and then more in particular, since the market did move back up above that $47.30 level, $47.20, $47.30 level today, now we've got this as an important level of potential support for this market going forward, and then down near that 5-day moving average, which again, is advancing too. So that's important to keep an eye on. Let's take a look at the semiconductors now. Yesterday, for the last 2 days, 2 or 3 days, I've been pointing out, actually since back in here, I believe, that it was potentially looking like an inverted head and shoulders pattern. And yesterday, I said it looks like it took out the neckline here, and that would indicate a move up towards $38 a share as the target. If you take the height of this pattern, which occurred right here at 36.80, down to the low at 35.60, which is $1.20, added to that 36.80, and that gives us a price objective of $38 a share. It doesn't mean wait for $38 a share to sell, but had you gotten long in here with your stop just below there, it makes for a real nice risk-reward trade. The daily time frame still kind of mixed up in here, so it makes me believe that this current move will need to digest maybe down towards that 37 level or so. So if you're in it, be sure to protect your profits in here. But again, this weekly time frame trumps the daily activity, and we've got just a real bullish looking pattern here, in particular since we've taken out the highs of the last 2 weeks. Actually, the last 3 weeks we've taken out highs in here. So the semiconductors act good. They're being led by stocks even like Intel. Intel's at a multi-year high here. Well, maybe not a multi-year high. I'm going to get a little aggressive in my adjectives, but about a year and a half or so, about a year and a half high in Intel. So it looks like Intel's at an area where you would expect to see some resistance, though. Maybe it can, I don't know what happened there. Maybe it can push past that level, and we've got a bunch of shorts stuck in there. I don't know, but like I posted on my on the top of the blog today, successful speculation begins with objective observation. And what we objectively observed in these semiconductors, I expressed a little bit of doubt about the ability to do it yesterday, and that's really why I posted that phrase that I thought of today about objective observation. We have to learn to trust the markets and trust price, because price is the only thing that pays us. And it was clearly sending us a bullish message yesterday in here with a low risk area to get out in case we misinterpreted that, or if the market had other plans. And looking at the IWM next, we got it moved back up above the 83 level. So that's good. What I identified yesterday was this level here. I said about 83.30. It looks like it's really just kind of toying with that level. So it's still at a critical area in the short term, but it's encouraging to see that the 5-day moving average is advancing once again. So I think down near 82.50 seems to be the first level of defense for the bulls in here. And as I pointed out yesterday, it doesn't always mean a reversal's coming, but we did get the break of this trend line. We'd seen that this level of resistance right here on this day was acting as support, and we did see nice follow through on it today, and we've got another higher high past this level of resistance. So it's looking like the IWM is shaping up in here, but it's more neutral again on this daily time frame. It's just a lot of back and forth action, and it's going to come down to individual stock picking and keeping your time frame shorter on these indices. So that's where we all are overall in the markets.